and you can see some good rallies. But with a declining 200-day moving average, they're more likely to fail than continue. And here now, finally, the 200-day moving average is flattening out. Maybe this is something to consider for the future here, to put on your radar and see how it sets up over the next coming weeks and months, to see if maybe Generac can turn the story around and begin a new uptrend. Google, we saw guilty till proven innocent. Rallies above the declining 200-day moving average. If the 200-day moving average is declining, be highly suspicious. Be highly suspicious. But when it starts to turn flat and then we see a higher high, that means the buyers are in control. You can buy here with your stop under here for an investor. And then as it rallies up, you wait for the next pullback. It starts to rally again, set your stop under there. Now an investor might have their stop here. So you would have gotten involved at maybe 108 and had your stop at 125, 126. LMND. This one, a lot of people like this company. I think it's because of the symbol, lemonade. It just sounds cool, I guess. But look at these rallies. And these are great rallies, which, by the way, is a nice measured move in here. A to B, B to C, C to D. But anyways, with the declining 200-day moving average, don't trust those rallies. Meta was in an awful downtrend for most of 2022. And coming into 2021, 2023, you didn't have to buy the low to make money. In fact, it gapped up over here. It pulled back. The 200-day moving average flattened out. You might have purchased here with a stop under there. You might have purchased here with a stop under there. You might have purchased right here with a stop under there. There's still plenty of time to make money. You don't have to buy it down here, because every time you try to buy down here, you've probably tried to buy it here, 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 and there, and it just doesn't make sense. This is the institutional line. It tells you that the big money is accumulating, buying stock, and moving prices higher. That occurred in just March of this year for Microsoft. It made the higher high above that 200-day moving average, which had flattened out at about 275, and it's continuing to make a pattern of higher highs and higher lows. Now, it just broke that pattern, and maybe you would have gotten stopped out, but what's wrong with that trade? NVIDIA, big uptrend into March of last year, and then it fell apart, and the 200-day moving average began to decline. Great company. All you can say about that, unless you're dollar cost averaging and you're playing some kind of other different game, it still doesn't make sense. Wait for the stock to break beyond resistance. Make a higher high above a flat to rising 200-day moving average. And even if you bought it right here on this earnings report, or right here, or just recently, you're still in a primary uptrend, and there's money to be made on the long side. When it's in this trend, the uptrend above a rising 200-day moving average, you still don't want to buy dips. You want to buy strength after the dip. You want to buy here. You want to buy here as it makes these higher highs. And then manage risk, because things can and do fall apart.